Hi class, a pleasant day to all of you. This is your Prof. Sir Dan, and in this video we are going to discuss the basic concept of corporation. And our topic is we will explain the nature, attributes, kinds of corporation, rights of stockholders, different classes of stocks, and different accounts of share capital. And our lessons are first, definition of corporation. Then we will make a comparison on the equity structure of corporation versus partnership and single proprietorship. And then we will do a discussion on the attributes of corporation and parties in the formation of corporation. Second, we will explain the different classifications of corporation and incorporation requirements. And the third lesson is that we will provide a discussion on the different accounts of share capital and kinds of share. Okay, let us start. What is the definition of corporation? A corporation is an artificial being created by operation of law, having the right of succession and the powers, attributes and properties expressly authorized by law or incident to its existence. Okay. With this definition, let us take a look of the comparison of the equity structure of sole proprietorship, partnership, and corporation. Under sole proprietorship, we have learned that the owner's equity consists of the owner's capital and the owner's drawing. Okay, and we have learned that profit and loss of the sole proprietorship is closed at the end of the reporting period. It is closed to the capital account of the owner. Under partnership, the partner's equity consists of the capital accounts of each partner and also the drawing accounts of each partner. And we have learned under partnership that profit or loss is closed on the drawing account of each partner. Okay, you use the partner drawing account, and then this drawing account will be closed to the respective capital accounts of the partners. Okay, under corporation, the stockholders' equity consists of the equivalent of the capital account is share capital. And share capital is also called capital stock. Okay, they are synonymous. You can use share capital or capital stock. And the other account that we will be using under corporation is the share premium. We will illustrate what share premium is in succeeding slides. Okay, and the equivalent of the drawing account is the retained earnings, because here the retained earnings is the account used by corporation to record profit or loss from operations. So if there is a profit, okay, you will see there is a credit side on the retained earnings, because as we have learned, the equity side, the normal balance is credit, okay? So if there's a profit, it will be reflected as a credit on the retained earnings, okay? And if there is a loss, then this retained earnings account will reflect a debit balance, or it will be debited. Losses are debited under retained earnings. Okay, of course, the other account that will be used is the income and expense summary, okay? Okay, class, so here the retained earnings is, as discussed, is for accumulated profit and or loss. So here we are not closing the retained earnings to the share capital. It is not closed, okay? So it will remain, the balance will be carried forward. However, we can differentiate retained earnings into two: unrestricted or restricted. Unrestricted means there is no specific purpose yet for the use of the retained earnings. Restricted, this is portion of the retained earnings that is set aside for a specific purpose. Okay? What are those specific purposes? Like if their company is planning to build a new building or buy an equipment which has a significant or a huge amount. Okay? And then again, class, if the retained earnings has a debit balance, it means that it is deficit, meaning that the company is showing continued loss from previous operations. Okay. Now, class, let us discuss the nature and attributes of corporation. First, it is an artificial being. Corporation is an artificial being, which means separate and distinct personality from the shareholders. Okay? Then corporation has a legal personality because it is legally created by law. And as with legal personality and as a separate and distinct personality, then the corporation can be sued, okay, as a separate entity. Then third attribute of corporation is the right of succession. Corporations used to have a mandatory 50-year lifespan or corporate term. Now, under the revised corporation law, all corporations can legally live for an indefinite period of time, which means a perpetual existence. Fourth, corporate ownership. The interest and right is divided into shares of stock. Investor buys shares of stock to become part owner of the corporation or to become a stockholder. Limited liability. All stockholders are not liable for corporate acts nor for corporate debts. So, all stockholders have limited liability. Unlike partnership, there is what you call a general partner who has unlimited liability. Okay? Next is transferability of interest. Shares can be transferred without the consent of other shareholders. Transfer or sale of shares does not affect the business operation of the corporation. Okay? Okay, class, let us now discuss parties in the formation of a corporation. Okay, if you are forming a corporation, okay, these are the parties involved. First, incorporators, who are the people who originally form and compose the corporations. These are shareholders or members in the articles of incorporation. Incorporators are the one who started the corporation. Next, shareholders, or called also stockholders, are corporators in a stock corporation. Okay, if the corporation is a stock corporation, then the owners are called corporators or shareholders or stockholders. Members are corporators in a non-stock corporation. So these are, take note of the difference, okay? If it is a stock corporation, the owner or the owner are called shareholders or stockholders. If it is a non-stock corporation, the owners are called members. Okay, corporators includes incorporators, shareholders, or members. Corporators is a broader term. Subscribers are persons who have agreed to take and pay for the original and issued shares of a corporation formed or to be formed. Subscribers, these are the persons that intend to buy the shares of stock. Okay, however, the shares that they have bought has not been fully paid yet. They only made a partial payment on the stocks that they have paid, that they have bought, okay, or intend to buy. Promoters who bring about the formation of the corporation, okay. 7, underwriters, usually investment bankers, acting as middlemen. Middlemen as to whom? Okay, between the corporation and the stockholders. Okay, now let us discuss the classifications of corporation. Okay, in general, the corporation is classified as private corporation, which is owned and organized for a private purpose, or public corporation. These are government corporation. It can be national, provincial, city, or municipal government. Okay. Under private corporation, there are two kinds. The first one is the stock corporation, and the other one is the non-stock corporation. So under private corporation, you have the stock corporation or non-stock corporation. Stock corporation, this is owned by individuals and or by non-government units. Take note, non-government, okay? Ownership is sold in units called shares of stocks, and owners are called shareholders or stockholders. Stock corporation, it is organized for profit. So if it is a stock corporation, the objective of the corporation is to generate profit, and the profit is to be distributed to shareholders. Okay, the profit distributed to shareholders is called dividends. Okay, so shareholders are given dividends. Okay, for a non-stock corporation, there is no shares of stock. Okay, that's why it's non-stock, because no shares of stock. Non-profit in nature, non-stock, non-profit, stock for profit. Okay, so normally these are the non-stock corporation. These are the religious sect or religious school, civic or social in nature. Okay, so since that it is non-profit, so it has no dividends. There is no declaration of dividends. And owners are called members. For non-stock, owners are called members. For stock corporation, owners are called shareholders. Okay, let us continue. Now, after having determined the classifications of corporations, now let us be more specific. Classifications of private corporations. We have here according to degree of participation and according to nationality. According to degree of participation, we have closed corporation, which are privately held, and this is limited to selected persons or family members. And open corporation, it is publicly held, so this is listed in the stock market for purchase by anyone. Okay, so according to degree of participation, the classification can be closed and open corporation. Closed is privately held, open publicly held. According to nationality, we have domestic corporation organized under Philippine laws, and we have foreign corporation organized under foreign laws. It's a straightforward thing, okay? Now let us discuss the incorporation requirement. First, on forming a private corporation. Previously, to register a corporation in the Philippines, it was necessary to have a minimum of 5 incorporators. That was previously, okay? This requirement has now been removed. A corporation can now have just one incorporator, but up to maximum of 15 incorporators, creating a new type of corporate entity, the one-person corporation. Okay, before, the requirement is 5 incorporators, but now, under the revised corporation code, one incorporator can create a new one-person corporation. Okay. The next, with regards to capitalization, actually this incorporation requirement that we are looking at are those provisions that were changed under the new corporation code. Okay, previously corporations have had to have at least 25% of subscribed capital paid up at incorporation. Also, at least 25% of the authorized capital stock had to be subscribed at incorporation. Okay, meaning the 25% of your authorized should be subscribed, and out of that 25% should be paid up. Okay, but these provisions have been removed. Okay, so the 25-25 provision have now been removed. The code provides that stock corporations shall not be required to have a minimum capital unless required under some specific law. Okay, so now these 25% were removed. Okay, let us discuss kinds of shares or stocks. First, as to right. So we have the, the basic type, which is ordinary share, and it is also called common stock. Ordinary share or common stock are synonymous. Okay, and we have preference share, or you can call that preferred stock. They are the same. So ordinary share represents basic ownership class. Okay, it's the basic ownership class. If there's only uh, one class of stock, then it is understood to be ordinary share. Okay, this is the type of share where when only one class is issued. Preference share or preferred stock. The reason why it is called preference share because it has preferential rights over ordinary share. The common preferential right is over dividend distribution, meaning the preference share will be given first the dividend before giving dividend to ordinary share. Usually, preference share is issued at par, and the dividend rate is expressed as a percentage of the par value. We will illustrate this later. Oh, this is the illustration, by the way, I'm sorry. Like, for example, preference share. 10% preference shares, meaning this type of preference shares is entitled at 10% dividend, 10% from its par value. Okay, so if the par value is 500, so 10% of 500 is 50. So this type of preference shares will earn 50 pesos for each share. Okay, some will have 12%, some will have 7%, depending on the issued preference shares. Okay, let us continue. As to value, we have par value shares of stock, meaning there is an indicated value, or no par value share of stock, meaning there is no indicated par value. Okay? As to value, it can be fixed value is stated in the certificate of stock. So par value, there is a fixed amount indicated in the certificate of stock, meaning that is the amount of par value. Okay? The par value serves as the minimum basis for the amount of contribution. Okay, so for par value shares of stock, okay, the par value serves as the minimum basis, okay, for the contribution or investment. Okay, shares should be sold, issued. So when we say sold, we can also use the terminology issued. So for par value shares of stocks, shares should be sold at par, meaning if the indicated par value is 100, you should sell it at par at 100 and above par, meaning above 100, but not below par. So meaning not below 100. Okay? Preference shares are always issued at par value. So between common stock and preferred stock, the preferred stock is the one that always has or that is always issued at par value, meaning there is always a value. Okay? For no par value share of stock, there is no value stated in the certificate of stock. However, the no par value share of stock, okay, could have a stated value. What is a stated value? What is the difference between par value and stated value? Stated value is fixed in the articles of incorporation or by the board. So stated value is determined by the board or it is in the articles of incorporation. Par value is indicated in the certificate of stock. Okay? So now class, let us discuss now the different accounts of share capital. Okay? If you can recall, our stockholders' equity, the main accounts are share capital and share premium. Okay, so let us take a look of what is share capital. And share capital is also called capital stock. Share capital represents the equity of the corporation, which are divided into units called shares of stock. The different accounts of share capital are as follows. So class, these are the different accounts of share capital. So meaning share capital is a broader term. So the specific terms that falls under share capital are, first, authorized share capital. This is the maximum number of shares or amounts a corporation is allowed to issue. So this is the maximum number of shares. Okay, the corporation is allowed to issue. That is authorized share capital. Next is subscribed shares. Subscribed shares is the portion of the authorized share capital that has been subscribed but not yet fully paid. So we have learned that subscribe means that there are already investors who are willing to buy the shares of stock, but they have not made full payment of the shares that they are interested to buy. Okay, so next is issued share capital. So issued share capital, these are shares which have been sold and paid in full, whether in cash, property, or service by the investor. In issued share of capital, it means that we have already issued the stock certificate to the buyer or to the investor. Okay, so it means that we have already given the ownership, okay, the shares of stock, which represents ownership in the corporation. Okay, so we have already given to him the stock certificate. Okay, for subscribed shares, we have not given yet the stock certificate because the shares were not fully paid yet. We will only give the stock certificate or the document for the ownership of the shares of the stock if the stocks have been fully paid. Next is share premium. Share premium, this is the excess proceeds over par value. Meaning, if the stock has a par value, okay, so the share premium is calculated as the issue price or the price that you have sold the stock minus the par value. So for example, the par value is 100 and you sold it at 125, okay? That is the amount of your share premium. So in this case, 25 times the number of shares issued. That would be your total share premium. Next is outstanding shares. Outstanding shares, these are issued shares which are in the hands of the shareholders. So basically, outstanding shares and issued share are the same, okay? They are basically the same. So outstanding shares is equivalent to issued shares minus treasury shares. So if there are no treasury shares, outstanding shares and issued shares should be equal. However, if there are treasury shares, we will deduct the treasury shares from issued shares, and that will be your outstanding shares. So what is treasury shares now? Treasury shares, these are issued shares, okay? These are issued shares that were acquired by the corporation and awaiting to be reissued at a later date. Meaning you have already issued this, but the corporation bought it back, okay? We will discuss that, okay? So treasury shares is equivalent to issued shares minus outstanding shares. So the difference of the two is your treasury shares. So take note of the relationship of the outstanding shares, issued shares, and treasury shares, okay? Okay, class, that's it for now. And if you have questions, please let me know. Have a blessed day.